Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states and Puerto Rico. Today's topic is about guaranteed retirement income products. The monopoly that the annuity industry has is lifetime income. You're like, really? Yes, yes. I mean, you would think that from a marketing standpoint, someone in the grand poobah chair of the annuity industry, which should be me, but is not at this point, would just be going lifetime income, lifetime income, lifetime income, lifetime income, because isn't that what we all want at the end of the day? We already love the best lifetime income product on the planet, Social Security, because it increases with inflation. But somehow the annuity industry has blown it. But you know what? I'm going to pick up the pieces for them, as I always do. I'm going to carry the mantle across the finish line and talk to you about guaranteed income retirement products and the best ones that are out there that you might consider after this. A little bit of background, a little bit of history, because I know you want that from me. Annuities were developed in the Roman times as a pension for the dutiful Roman soldiers and their families. Latin word annua means payment, and that's where annuities came from. And they've been sold in this country for a couple hundred years, primarily the single premium immediate annuity version of lifetime income. But the annuity category is the only category in the financial business that provides a lifetime income stream. Don't come to me and say, well, how about a 30-year bond? Shut up, okay? You know what I'm talking about. If AI solves for lifetime income, for life expectancy, you start living forever, lifetime income products are going to become very, very important, and it's also going to become important who you align that money with to guarantee that lifetime income. That's the reason with us it's A+ or better, period, when you're doing lifetime income. There are 4 types of annuities that provide lifetime income, meaning as long as you're breathing, it's going to pay. Meaning there's no ROI until you die. Meaning if you set it up joint life with your spouse, that it's going to pay as long as one of you is breathing, uninterrupted and unchanged. Meaning that we can structure it so that 100% of any unused money goes to your family, not the annuity company. That's the biggest misconception I hear. So many people like, Stan, I really like the thought of that, but I don't want, if I die, I don't want the company to keep the money. 99% of the annuities that we structure for people, we sell more than anyone in the country, they're set up so that 100% of any unused money goes to the family, not the annuity company. I mean, you can structure it that way. So here are the 4 types. Single premium immediate annuities. And typically, that's a product that if you answer the 2 questions I asked, what do you want the money to contractually do? Income, when do you want that to start? Contractually, within a year, that's an immediate annuity, okay? If you go past a year in deferral, then you can use what's called a deferred income annuity. A deferred income annuity is an immediate annuity structure that you defer past a year. Within that same family of annuitization type products, payment products, is what's called a QLAC, Qualified Longevity Annuity Contract, put on the planet in 2014 by the Treasury and the IRS so that you could use your IRA funds with a QLAC for lifetime income, and you get some tax benefits as well. So people that say, never buy an annuity inside of an IRA, just dumb, stop talking, okay, please. You're making us all lose IQ points just listening to you. So a QLAC can only be used in an IRA type setting, all right? And then the 4th one is an income rider that's typically attached to an index annuity, which we could care less about. The index annuity is nothing more than a delivery system for that income rider guarantee. So SPIAs, DIAs, QLACs, income riders, that's it. That's lifetime income. No ROI until you die, will pay forever, A+ or better, quoting all carriers for the highest number. It's really that simple. Now, QLACs can only be used in a traditional IRA setting, 401k IRA, okay, 403b, 457, whatever. The other 3, SPIAs, DIAs, income riders, any type of account. Non-qualified, Roth, any of them, it can be used. IRA, it can be used in IRAs. So the only one that's just solely IRA is the QLAC, and Q stands for qualified. Qualified money QLAC. The rest can be used anywhere. And part of what we do, biggest distributors and sellers of annuities out here, but I still own the company. I still run the show. Buck still stops with me, and I want to talk with you if you are getting serious about making a decision. Certainly we want you as a client, but I want to make sure it's suitable and appropriate for your situation, and you're using the money in proportion and allocated properly. You can go to my site at theannuityman.com and download books, schedule a call with me, and run quotes, or you can just send me an email, stan@theannuityman.com. But guaranteed retirement income products, four primary ones that you need to shop, and shop all carriers. Now let's talk about how these income products are priced. The primary pricing mechanism is your life expectancy, or if it's joint life expectancy, is at the time you start the payments. Interest rates play a secondary role, interest rates play a secondary role, interest rates play a secondary role. It's all about life expectancy. The older you are, the higher the payment. Let me drive it home one more time. What's a higher payment for Social Security, when you're 65 or when you're 70? You are correct, 70, because you are older, because you have less life expectancy, which means there's less projected payments, which means those payments are higher. Don't try to thread the needle. There's no sweet spot moment, an arbitrage moment that you're going to beat the annuity company. You're not, Chester, Gordon Gekko. You're just not. It's life expectancy. You're transferring the risk for them to pay you for as long as you live. And if you draw the account down to zero, they're still going to pay. That's the value proposition, is you're transferring the risk to the annuity company to pay regardless of how long you live, and if you're on a respirator. And if AI shortens the medical breakthroughs and lengthens out the life expectancy tables, you win. Right now, I think it's a bargain, life expectancy, because those tables haven't changed yet, but they're going to. People are, well, probably not going to be that quick, Stan. Listen, what hasn't been quick with AI? By the time you see this, it's probably already happened. And with AI, who knows? The point is, A+ or better, to make sure that those guarantees can be backed up by the company. So life expectancy drives the pricing train. Another thing is lifetime income quotes. They change like a gallon of milk every 7 to 10 days. These companies are bidding on your business. They're bidding on your life expectancy. They're bidding on your ages. And if they have enough of you, then they lower the guarantee the next week not to attract you. So that's the reason I say annuities are all commodity products. We shop all carriers for the highest contractual guarantee. We don't care about the name. We don't care about the brochure. We don't care about we don't care. What's the number? A+ or better. What's the number? A+ or better, after we shop all carriers. It's that simple of a decision, period. Now, you might say, well, I like XYZ company. I'm not going to name companies, but you might have one that you just love. Well, then buy it through us. But my opinion, A+ or better, choose the highest number. It's a bidding war. There's not one company that's better than the other. It's a commodity product. So guaranteed retirement income products, we specialize in that. I've written books, owner's manuals on every one of them. You can download those for free. You can run quotes on my site for free. You can talk to me for free. We want to be your agent. We want to be your annuity advisor. We want to be part of your team. Give us a shot at it. See what you think. We're not hammers looking for nails. We sell contractual guarantees. You own an annuity for what it will do, not what it might do. And for contractual guaranteed retirement products, will do. All day long in a bag of chips, as they say in the South. Okay? One last thing, I did a video on how annuities can help your family and help protect your family. There's some strategies in that video that I share. Some I do personally for my family. That might be something you want to put in the back of your head. How do I take care of people when I'm gone? How do I dictate it from the grave, for lack of a better phrase? You can do that with annuity contracts. I think you'll like that video. It's kind of cool, and it'll get your head rolling a little bit. It might evoke you to and push you to schedule a call with me so we can discuss it and I can put together a customized plan. Hope that's the case. Thanks for joining me. See you next time.